What's up, traders? I'm Kenya with BK Trading Academy. So, a lot of you always ask, how do you get it done? How do you manage home trading, all those things? Well, we're right here in the office, and there's my little one. And hey, as a mom, you just get it done. So, I'm going to show you guys right now how I'm up over $800 for the day with a simple price action approach to the market. Putting it all together for you, charting, risk management, and all the different things you need to decide when going into a trade. So let's go ahead and hop right in. If you're new here, don't forget to subscribe, smash that like button, and turn on the notification bell. You'll love being here. All right, so let's hop in. So I'm taking a look at USD Chef on the monthly. Now, I'm on the monthly because I want to do a top-down analysis to really get a good feel for what is the market doing overall. Are we in a dominant uptrend, downtrend? Is the market moving sideways? So I just like to kind of go out a bit. And as you can see here, we were pretty much trending down. So in the past, this was like 2008 to 2010, we were trending down. Then notice the market started moving up and then kind of went sideways, and then we broke lower. And now we're back on the rise again, and we're retesting this monthly high here. Haven't gotten there quite yet, but that just gives me a good idea of what to look forward to as I move down on the lower time frame. So notice here on the monthly, we've been in a structure of one that's making higher highs and higher lows. So if I'm a long-term trader, I'm definitely going to be looking for the buy. For example, if I was a swing trader or a position trader, I could have gotten a buy right off of this structure here, right when it was broken. So we had this impulse, had a nice correction or pullback into the previous structure that was broken. So here was our previous monthly resistance. Notice it became future monthly support, and let's see how many pips it has gone up from this actual monthly time frame. So we've gotten about all the way to 726 pips on the monthly to the upside. So as a position trader, you would have done quite well, okay? So that's exactly what we want to see. Now, let's go ahead and continue to drill down. So we've established that we have a bullish trend and we're going to continue to move down. Now, let's see how we look on the weekly. So on the weekly, we're going to move down and a very nice bullish trend, right? You can see here we had previous weekly resistance. That weekly resistance became an area of support and also resistance again. We broke higher. The market came back and look where it paused, guys. Look where it paused. So it paused right here and formed support. The market bounced, went up, came back down, came a little bit below. Now, look here, when you're looking for an entry, let's say if you were looking for an entry off of this weekly, we could extend this zone out. So if we extend this zone out, look how it did dip a little bit below it. So one of the things that I always pay attention to is heavy wick areas. Notice that although this was an area of resistance, so resistance that became future support as well, and also resistance multiple times, I'm also keeping in mind that we have really strong resistance here. So this is an area, right? And notice if I just kind of bring this line out, we retested right below it. So this is where risk management is so important. You have to really determine what your risks management system is and what is your risk tolerance and how much you're going to risk when you're going into a pair so that you don't have to think about it too much once you're in it. Now, one of the things that I do see here on this weekly is that we do have a double top. Okay, so this is a potential reversal pattern. Hasn't happened quite yet, but what we could see is that the market will bounce from this area as it did. And notice that it did bounce up just a little bit. So for those who sold here and maybe put their stop loss, let's see how many pips this is from resistance. So those who put their stop loss anywhere within 85 pips would have gotten stopped out. So this is why as a swing trader, you want to have really wide stops, but you want to make sure that your profit potential is just as much as that. But you want to make sure that you have wider stops so that you give the market enough room to swing, because liquidity is going to be collected anywhere with above strong resistance. You have to know that. So that's why I like to plan additional positions within 100 pips of my swing, and I like to place my stop loss away from that. But if you trade a particular pair, you will start to know how it moves. You'll get comfortable with how it moves, and you can predict your risk a little bit more confidently. So let's say if we did short here from this resistance and we want to take it back to a strong reversal zone, you'll notice that this area here was previous resistance, and also it has formed now as support. So that was 225 pips to the downside. If we're able to take this to the neckline here of this double bottom, that would be 650 pips. Okay, that's quite a lot of pips. Now, I got the buy off of USD Chef. I'm up over $800 for the day on this pair. I do scalping and I also do swing trading as well. So I took a buy swing off of this, and I also did some scalps this morning. I'm going to show you exactly how I executed. All right, so overall, my bias on the weekly is bullish. Even though we have a good opportunity here on the weekly for a short, and you would have been in profit. Look how the prices dropped. You also had a really good opportunity right here off of this zone here. That was a really strong reversal zone. And here is your uptrend on the weekly. All right. So you always want to find your structure, or what is your directional bias based off of what the market is doing. If we are clearly in an uptrend on the monthly, weekly, I definitely want to be looking for buy opportunities until the market tells me to be doing otherwise. So we would have taken a buy right off of this area here, and we would have clearly been in profit. Also, too, notice that I have an uptrend on this weekly, and I also have a bullish flag. So a bullish flag is a continuation pattern. So we had an impulse. We had a impulse to the upside. We had a flag correction, and price continued to break out of that flag. So we have a push, a correction, and another push, or what we also say, an impulse, a correction, and another impulse. All right. So now let's continue to drill down. I'm going to go ahead and remove those drawings, and I'm going to drill down to the daily. Now on the daily, let's ask ourselves, so if we're a scalper or an intraday trader, right, we can look at the daily to find an opportunity. Now, one of the things that I like to do is identify structure. I'm always identifying structure. One thing I can say on this daily is that we do have an area of, I would say, horizontal resistance and also horizontal support, right? So I think some of you would agree with me, if not all. And we can kind of see that the price sort of looks sideways. So if we see that, now this is hundreds of pips off the daily, but it sort of looks sideways. But I can also see that the market is giving me higher highs and higher lows. Okay. So here we have where the market was moving down. It came to a low. It gave us a low. It then gave us a high. It gave us a low. It gave us a high. It gave us a low. So notice these swing points that I'm pointing out. This is going to make it really easy for me to find an opportunity to enter the market. So now that I'm looking at this on the daily, I want to pay attention to where current price is right now. This is where price is right now. And I noticed that even though we're in an uptrend on the daily, we are pausing right at a reversal zone that was previously resistance, and it was also support within this area. So if I was buying from here, which I did today, and actually since yesterday, I would have been able to take that profit target at least to here. So notice that when the price came here, look where it fell back, it came down and then continued to rise, and now it's testing this area here. Okay, so a lot of drawings. I'm going to go ahead and remove some of these, but I'm basically talking you through how you build a case to enter the market. And one of the things we always teach our students is that you don't want to just get into the market for the sake of getting into the market. You want to have entry reasons for why you're getting in. So you need to have a system, a proven system that you are getting in based off of the rules that you follow for that system. So for example, for those who trade our price action channel strategy, what I love this for new traders and also for existing traders. Here's our channel on the daily. Okay. And if we wanted to find a buy opportunity, we simply could have taken a buy right off the middle of the channel. So notice in the middle of the channel, we have where price was very strong resistance. It was strong resistance, and it was also resistance and support within this area, but it's also forming as very strong support. So considering this, we could have taken a buy off of this support zone, which I did. Okay, so I executed with multiple lot sizes, and I took price off the table as the price, or profits off the table as the price went in my favor. So this morning, I was able to catch some scalps on the lower time frame, and I'm going to show you exactly how I did that. Now, overall, I'm bullish because we have a bullish structure on the monthly, weekly, and daily, right? Now, notice when the price came to the top of this resistance, which was also previous resistance in the past, notice how this aligns with our trend line resistance, and the price fell from this area. So had you sold from the top of the trend line or the top of the channel, logically what we do is take price in the middle of the channel when we are trading channels. So look here how the middle of the channel is a very strong reversal zone as well. Okay, now let's go ahead and keep drilling down. So as a scalper, for example, or even as an intraday trader, how would you have executed? So notice how I have a I have an uptrend on the daily, but as I continue to drill down, the trend is going to look a little bit different. So if I go down to the 8-hour, now you can see on the 8-hour, you can see the uptrend a bit, but you can also see that I actually have a downtrend on this 8-hour. So if I were a short-term intraday trader, for example, or even a scalper, I would be looking for an opportunity on the lower time frame. I can even continue to drill lower. So on the 4-hour, now here's my structure on the 4-hour. So I have a downtrend, okay? And I'm going to go ahead and capture this inside of a channel for those of you who are familiar with that strategy. So here is our price action trapped in that channel. And now I'm going to go ahead and identify our areas. So here is your support. Okay, this is your support. Notice where the price came to the bottom of the channel in reverse there. And remember, we already identified this on the higher time frame. So this is why we're able to confidently execute on the lower time frame. Okay, so now I've established that as a swing trader, my directional bias is bullish. As a short-term intraday or scalper, I can take a short off of the lower time frame if I choose. And remember, with channels, we trade the channel going up and also going down. So here's your channel on the 4-hour. I'm going to add my 50-period moving average. So this is for confluence. So I have a downtrend. That's one rule. Price is in a reversal zone. That's another rule. So here is our reversal. Even though I did put this, I'm going to go ahead and delete these zones here. We're going to go ahead and map it out. So this is a reversal zone here. And I also identified, now this is a minor reversal zone in my opinion. So this is a minor reversal zone. Okay, so this is going to be my resistance. My previous support became resistance. So previous support here, look how much the market moved up, came back. But you can also see as we scroll out to the left, this was also strong resistance, market dropped. Okay, so I'm expecting short term that I could get that same move that has happened in the past. All right, so we have a correction back on this 4-hour after the drop, and now price is pulling back to a reversal zone. It's under the 50-period moving average. It's retesting our trend line resistance, and we want to see that it drops. Now it actually already did that. Okay, so you actually would have gotten, let's just measure how many pips. So from the wick here to the bottom of this 4-hour candle, it has already dropped 41 pips. It went back up and retested, and now it's dropping again. So I already took a few scalps off of this. Actually, I closed a few scalps and had one intraday that hit pretty quickly. But notice how I started from the higher time frame, the monthly, worked my way down, building a bias in my head of what the market is doing. What is price action telling me? And now I'm down to the 4-hour on an intraday time frame. And the reason why I'm on an intraday time frame is because if I'm looking to trade this within the course of the business day, so anywhere from market open to market close, that would be an intraday. Now, if I hold this trade overnight, I'm then crossing over into swing trading, all right, where I will be subject to swap fees and more commission from my broker. So this is how you pretty much can find a high probability setup using simple price action. You don't even have to use indicators. I simply just pop this moving average on just for confluence. When I say confluence, that means extra confirmation. You want to build as much confirmation as possible. And now where would I put my stop loss? So I can easily put my stop loss. So the way we use the moving averages, I can put my stop loss above the moving average, so just a few pips. So let's grab our ruler and let's just see what makes sense. So maybe we could do about a 20 pip stop loss. I think that's sufficient, 20 to 25, especially if we're already getting wick rejection right here in the zone. And if we could take this to the middle of the channel, that would be an excellent opportunity. So risking 20 pips to make about 50, that's a really good opportunity, okay? And I think that we could definitely do that. Now, today is Friday, so you always have to be aware of the days that you're trading. It's really good if you can have an understanding of the pair that you also trade, get really familiar with this movement. So if you are a new trader, you really want to start to pay attention to pairs that you like and even note pairs that you don't like. So guys, this is how you can simply make anywhere from really whatever you want. You know, if you want to make $50 a day, $100 a day, $800 a day, $1,000 a day, you just have to put together a plan and know how to read the price action, follow a set of proven rules, document your system, and go from there and practice it over and over again. So guys, I hope you found value in this training. I hope that it gave you some newfound info that you can go and implement into your charts right now. If you want the opportunity to trade with us live in the market, daily, Tuesday through Thursday, with our students. Check out the information below. We would love to have you. We have a great, thriving community. We also provide lots of other stuff, signals, everything. Go check out our website. It's all in the description. And I will look forward to seeing you in the next video. Do me a favor and slash that like button before you go. Make sure you subscribe and turn on the notification bell. And I'll see you in the next training. Thank you so much for watching.